Bottom line, when it comes to trading, if you have inconsistent behaviors, you're going to have inconsistent results. So the point of this video is to streamline your thinking about how to manage your expectations about trading and how to manage your account around those expectations. You're making sure that you have an objective, a place where you're going with your trades. You want to be sure that you are planning your trade and not just reacting to market content. So without further ado, let's get into it. It's very powerful what a simple aim could do for you. Well, having a goal would do. It's like having a bullseye in front of you. You have something that you are aimed at, something that you can see if you missed. If you throw the dart and it lands here, you can actually see how far off you are. If you shot it over here, you can see how far off you are. If you hit it, you can know that you hit it. You can feel confident that you hit your goal, that you hit your target. So it's amazing to me. It's amazing to me how powerful a goal can be, and it's amazing to me how that's like the number one thing that was not in my mind. I just wanted to make billions of dollars. Coming into the marketplace, what? I don't have to listen to a person. I don't have to ask permission to go to the bathroom. I don't have to stick my arm in a pizza oven and get burn marks. I don't have to do this till 3 o'clock in the morning and then wake up and go to school at 6 a.m. What? Yeah. I was all over trading, but I didn't have a goal. What not having a goal did for me was it made all my behaviors and actions on the charts random because they don't have an objective. There's no goal behind it. So that's why I say, what about if I just made a target of $137? What is this? What is that goal? The point is it's just a goal. Whatever it is, it could be different for you. It could just be $100. It could be $80. It doesn't matter. The time frames can be different as well. Like let's say for this example, my time frame is a day. With inside of a day's time frame, the goal is 137. See, I have a goal and I have a time frame for that goal. I've confined the amount to be hit within a certain amount of time. So I have a goal and I have a time frame. I'm having a definite aim. I have an objective so that I can be objective. Now I have to pick a pair. So my pair for this study, in this example, I'm going to pick is GBP JPY. You have to be definite about the pair you're going to trade. You're going to be definite about the amount that you're going to go for. You're going to be definite about the targets, the time windows, the time horizons for these goals to be achieved on this pair. Now, the thing you have to consider about the pair, can this pair in the time frame that you've confined your goal to, can this pair, can it produce the amount of pips required for you to produce your goal? So what you're looking for is if you go on a x-axis on GBP JPY, you're going to put a 24-hour time frame. And inside of that window of time, you're going to see if the market, that daily candle, can produce this much money. Let's say on average, GBP JPY produces a 100 pip daily candle. So I have to ask myself, so within these 100 pips and no more, I can't expect 500 pips, 700 pips, 3,000 pips, 300 pips, 250 pips because I'm outside of the scope of what I'm aiming at. See, that's the power of the aim. It's not that you're leaving money on the table, it's just that you're going for something. And once you get it, you got it, and then you go for something else. Okay, so you're entirely in control of what you aim at, how much you go for, how much you want. And it's a very decisive position to be in. It's a lot of control. You need to exercise a lot of control when it comes to trading. And these are just some of the information pieces that I was working with to help myself manage my expectations on the chart better, to give myself more control. That way I don't have to give over my control to my emotional reactions to what's going on. Random numbers are being thrown out there. I'm going for the moon as far as targets, and I'm overstaying my welcome in trades or understaying. So I feel like I'm leaving money on the table, or I'm staying in because I'm greedy. And let's say I'll be floating 200 bucks, 300 bucks when way over my goal, 137 to stay on pace for my overall objective. And it's like It's because there's no aim, there's no structure, there's no management to your expectations. So these are tools, right? Having a goal is a tool. Setting a time frame for your goal is a tool. Knowing the pair that you're trading, understanding the type of pips it produces within that time horizon that you're going to achieve your goal in, you have to make sure that that's actually viable. What we're trying to do now is see our lots. What's the size that we're going to take on? Let's get a couple examples here, actually. Let's say it was one lot. All I would need to achieve the goal of $137 in that day, all I would need for the one lot is 13.7 pips. To do it on let's say to cut that in half. If I want to use half the lot size, I need to double the pips. So to double these pips, it would be 27.4 pips. If I want to cut the lot size in half, I will double the pips, and that's going to be 54.8 pips. Okay, so I gave myself three different lot sizes. One lot, half a lot, a quarter of a lot. And then I found the amount of pips about, roughly on average, because every pair pays out to pips differently. But this is about how many pips it takes on one lot to produce $137. Okay, so if I'm looking at my pair, GJ, on average on a day, it produces 100. That's 13.7 pips is well within the day. So if I trade on a one lot, all I have to do for the day is shoot for 13.7 pips. Isn't that crazy? Like, what? Because if you see how much price will fluctuate in a day, maybe the from the low to the high is 100 pips, but all of the fluctuations, if you add it up together, this market is moving maybe let's say 300 pips total. So somewhere in here, there's a 13.7 pips move calling out to me, and that's the only move I have to catch within that daily time frame for me to stay with my goal of $137 within a day. That to me is crazy. Say, okay, Edgar, I can't. Here's a question you got to ask. Can my account sustain the lot? Okay, well, that's why I put three options here. Let's say it cannot sustain the one lot. Cut it in half and then double the pips. 27.4 pips. How many pips on average is GJ pushing each day? Where's one little move that I can catch that gives me 27.4 pips on a point 50 so I can hit my definite aim? I can't do a point 50. That's okay. Let's cut that in half. Is 54.8 pips within the frame of this day? It is. Like if you just go look at the pair, go look at your pair, study their time frames, and you pick the time frame. If you're going for moves that are within a day's time frame, you study that frame of time, the 24-hour window, and see what type of moves are being generated. How much pips within that window can you be expecting to be generated so that you can understand how to target within the means of what the market already produces on a daily basis. See, so this is how you manage your expectations to line them up exactly to what it is you're studying. You got to pick the pair, you got to pick the time frame, you got to set the goal, and you have to see, okay, measure how can I make these pips make the goal hit on this time frame. And it's just calculating. You predetermine everything, and all you're doing when you're actually trading, you're executing this plan. Check this out. Risk reward. Now, based on your risk reward, let's say two examples. Let's say you are aiming to make $2. This is what this is saying. For you to get into that opportunity to potentially make $2, you are risking $1. That is a 1-to-2 risk reward ratio. Okay, so say here, let's say the goal is 137. Well, what's 137 divided by 2? It's 68.5. Here's the one, $68.50. So now I already know what I'm risking. All right. And what I stand to gain is two times what I'm risking, which is the 137, which is the goal. The reward is the goal. I'm just being prepared. I already know if my goal is 137, my lots are these, my risk reward is this. you already know what calculations to take. No number should hit you by surprise. Like when you're trading and then you see a number on your phone screen that you were not expecting, it's because you did not manage your expectations. So now you got took by surprise. So see here, it's like, man, before I even get in a trade, I already know what I want, how long I'm looking at, and about how much I stand to lose if I get into this type of opportunity, and about how much I stand to gain every time. See, this is how you truly do it. Now, if you know you're more of a 1 to 3 kind of person, then you do the same thing. You would do 137 divided by 3 is 45.67. Your risk, your one would look like this, but you stand to gain that 137, the goal. All right, so here's how we manage our expectations. You have a clear, definite goal. All right, only you can give that for yourself. You set a time frame. How do you pick a time frame? It's based off your lifestyle, your behavior pattern, the access to time you have, the access to the trading you have, like the time to concentrate you have, the time horizons that you're even capable of waiting, or have experienced waiting. That's within your own experience, so you have to choose that. The pair is up to you. Again, pair is based off of what pair moves around the times that I'm available to trade at. That's how you pick. Or what pair is producing the right amount of pip production for the time frame that I'm looking for my goal to be achieved at. It's all strategic, it's all intentional, it's all has a purpose for it. You have to figure out how many pips on average in this time frame that I'm looking at for this pair is being produced on average, so that I can know what to expect or shoot for, or how to target when I'm targeting for these types of moves. All right, what type of lot sizes do I have to work out? You can make yourself a graph of different lot sizes. You can make yourself a whole lot size charts with different pips for that one goal, so that maybe you can even make it like a game, just like, okay, I'm going to go for this until my account gets to this amount, then I'm going to go into this level. So it's like level 1, then boom, now that your account hit a certain amount, let's go hit number 2, and then we can quicken the time it takes for you to hit your goals by halving the distance it takes to get to your goals. All you have to do is double your lot size, but your account has to be able to support that. And then let's say your account now is able to support the one lot, then boom, that's how much faster you can get to your goals. You can chop the distance it requires to get to your goals in half by doubling your lot size. All right, so that would be like level 3. I'm always shooting for at least the bare bones minimum 1 to 2s, 1 to 3s. There are times where I have opportunity to extend that, but I'm just showing this for this example. I'm at least going for double or triple what I'm risking per trading idea, not necessarily per trade. I do my stuff per trading idea. Once you have the goal set, a time frame set, the pair set, pips and lots studied, your risk reward, what are yours on average, or what are you shooting for? What you've just done is you managed your expectation.
Peace.
So what about you? Does $137 a day sounds appetizing? Does it sound satisfying? Can it get you out of something? Can it get you into something? Or would maybe for you be $200 a day, $1,000 a day? What kind of plan would you like to see in the future? And if you need a challenge, we're happen to be hosting one coming up soon where we teach people how to build candles and have a structured trading approach that's super simple, the simplest way to strike markets, hands down, guarantee it. We'll see you guys in the inside.
Peace.